The next hype phase that Bitcoin will undergo is probably in the next cycle after the fourth halving. So I wonder what we will see there. So imagine the circulating supply of Bitcoin. So if we plot the circulating supply of Bitcoin, we can see that we currently have 19.5 million coins in circulation. Now, we know that there is a hard cap of 21 million coins. So the remaining 1.5 million coins will be mined over the next 100 years. Now, with each halving, the supply issuance gets cut in half. So this curve that you can see is flattening out. And so pre-halving 1, 50% of Bitcoin supply was mined. And between halving 1 and 2, it's 25% of Bitcoin supply that was mined. And another 12.5% between halving 2 and halving 3. And it keeps on going, and so it flattens out. Now, let's use our metric liveliness on this circulating supply. You can see that each halving, by the way, each halving takes 210,000 blocks. So at the x-axis, you can see the years and the block time. Now, let's plot our liveliness metric into this circulating supply. Now, we can divide the supply into two categories. Now, one is the active supply and the other one is the non-participating supply. Why is it non-participating? It's because those coins, they don't move on chain. And so many of these coins from this non-participating supply come from this 2009, 2010 era where Bitcoin didn't really have a price yet. So a lot of these coins are lost, and this also includes the million coins that belong to Satoshi, who are very unlikely to move. So this non-participating supply does not actively take part in Bitcoin's price discovery. So the active supply, on the other hand, is the supply that's responsible for Bitcoin's price discovery. So we're going to zoom in to that active supply because that non-participating supply we can kind of ignore. Now, the active supply, from instead of having 19.5 million coins previously, we now are down to 12 million coins that are kind of in circulation, that are actively responsible for Bitcoin's price discovery. Now, this active supply is built up from all kinds of liquidity levels, so from very illiquid supply to very liquid supply. So we're going to try and divide this active supply further by looking at HODL behavior. Now, if we think of the hodlers of Bitcoin, we can actually divide that active supply further into the following two categories. There's actually two main ways to measure HODL behavior on chain, and one is through time, so by looking at the age of coins. So in particular, if coins are old, they are likely to belong to these long-term holders. They belong to the group of hodlers. Another way is to look at spending behavior. So we can identify the entities that are on chain, and those entities have a spending behavior. So if an entity spends less than 25% of their holdings, they are classified as illiquid, and they are very likely a person or an entity that is a hodler. Now, so we can divide this supply further into the two categories: illiquid supply and the supply that is available for trade that remains. Now, let's discuss a little further this illiquid supply. So for that, we're going to now plot the price information of Bitcoin. And we see those black dots in the price line. Those are the all-time highs that are being made. Now let's zoom in on those black dots, on those all-time highs when Bitcoin's price goes exponential. Because when Bitcoin's price goes exponential, there's actually the max incentive to spend coins on chain because price just made an all-time high, and there's no other moment in time where you could have made more profit by selling. So we can actually see that those green zones that I highlighted here, they correlate with these spikes in illiquid supply. Now, actually, the group of hodlers, they only stack sats, but only during such moments of exponential price increases, they tend to sell off some of their coins. Now, why is illiquid supply jumping instead of going down during those phases? It's because during these green zones, during this hype phase of Bitcoin, a lot of new demand is coming in. And so initially, supply that is being bought up, this is classified as illiquid. So there's a lot of new entities coming into the space. They are classified as illiquid. So we see an initial spike in illiquid supply. Now, after the bull run is over and we go into a bear market, these new people that came into the space, they are very sensitive to price action, and they sell some coins, and those coins become more liquid. But during that whole phase, we can see that the trend of illiquid supply is actually a linear trend. We kind of keep on going. We move up in illiquid supply in a linear fashion. And during such a bull market, we see a short spike in illiquid supply, but then kind of fall back to that baseline of hodlers that are kind of stacking sats and make the supply illiquid. Now, all this to say that illiquid supply is actually in a linear trend, as you just saw, and the new supply issuance, which we showed before as well, is diminishing with every halving. So let's now look at this available supply for trade that's left, and we can actually see that since the third halving, the available supply for trade that remains, that is shrinking. Now, this is kind of logical because the growth rate of illiquid supply has been outpacing new supply issuance due to the fact that illiquid supply grows in a linear fashion and the new supply issuance gets cut in half with every halving. And we're actually not far away from the next halving, which is at block 840,000. Now, why did we not see a supply shock of any sort? There's actually three reasons for this. And the first reason is that we're still relatively high as is. We can see that the maximum available supply for trade was around that 5 million coins, and we're not far off from that to begin with. The second reason is that since 2020, and with Bitcoin being adopted as an institutional grade asset, we also got a bit of the fiat malpractices on top of Bitcoin. So if we plot the future volume that is traded on top of Bitcoin, we actually get the following graph. And so this is actually paper Bitcoin that is on top of the actual supply of Bitcoin that is being traded. And so this is the derivatives markets. I only showed the volume of futures here. And these futures are dollar denominated. So these future contracts, they don't need any underlying Bitcoin to speculate on Bitcoin's price. And so we can see that the trend here is that after the third halving, we still kept on moving up a little bit in terms of the amount of Bitcoin that was traded. But since 2023, we have been moving down nonetheless. Now, this paper Bitcoin doesn't include things like FTX, for example, where people thought that they actually bought the underlying asset, but they only had an IOU that was not backed. So the paper Bitcoin that I show here is even in a conservative way of this paper Bitcoin. Now, the last reason why I think we haven't really seen a supply shock is because supply only gets tested really once every cycle, where we have a phase of true hype in the market. And so we had that in 2021, and we saw those exponential price increases. It was still a bit of a disappointing cycle, and we just explained a bit why, because the available supply for trade seems to be very high, and there was paper Bitcoin trading on top of Bitcoin during that cycle. But we're moving back down, and that's a positive thing. Now, when the next hype phase that Bitcoin will undergo is probably in the next cycle after the fourth halving, and that will really be a true test for this decreasing supply again. So I wonder what we will see there.